welcome back. Welcome back to another episode. Today is January the 24th, 2019. Uh, Hopefully, you've once again had some opportunity to make some money uh, during this trading cycle. If you have not, sit back, hang tight. Hopefully, we can give you some tips and tidbits to help you turn it around if you haven't, and or maybe even help you to to make even more if you already have. Right. But before we get into that, let's get into this, which is the disclaimer. Disclaimer goes a little something like this. Any and all information shared with you by Forex Tech Magazine should be considered to be for educational and entertainment purposes only. Nothing that we share with you should be considered to be investment advice. If you're in need of investment advice, then our suggestion to you would be to seek the assistance of a licensed, competent advisor. And I do apologize for my voice. I have been eating some Takis, and those things are hot. And I have, and all my water is in the kitchen, and I don't want to get up and go get it right now. So I'm gonna play through the pain. All right, so let's get off this right here. This is the Euro CAD, not trading that at the moment, but we will look at some things that we will be trading. Let's look at. I'll just start from the bottom. Get here. Get to where we're going. All right, so this right here is a Great Britain pound, New Zealand dollar. This right here is one that we're actually in a trade with right now at the moment, and as you can see, it's already completed. Completed two Fibonacci sequence, and now is working on the third, and this is where we're at right now at the moment. And as you see, it's in the process of pushing up to our take profit, our D, which is up here, right? Excuse me. This is our A, which is the C for this particular sequence here. This is our A, this is our B. Price has pulled back to the C, which is in here, which is around the support and resistance line. That's why drawing support and resistance lines also are very important when you start to trade. Just kind of know where those points are at on the chart, because typically those tend to be U-turn points on the chart. And as you can see, price came down here and it U-turned back up. Price got up here to this resistance and the U-turned back down, came back down to the support, U-turned back up, and now it's like maybe U-turning back down again. I don't know. What we're looking at here, though, if we're right on this, should be the push up, pull back, push back up again, and then some type of continuation on up to the next level of resistance. Looks like right now it's pushing up, pull back, push up, pull back, and we'll see if we can catapult it up from here. We'll see how that plays out over the next 24 to 48. Right now we got a total of, for this particular pair right here, looks like 82 pips. So it's $559. It's not bad. Got into this trade on the 22nd, so it's 2 days in, $500 some. It's not bad. I personally though prefer trades like this right here. As you can see, these three trades, each one of these trades were really only open up for about a day. This one right here, the Great Britain pound, Aussie dollar, opened it up on the 22nd, closed it on the 23rd. Yeah, that was like about 1476. On that one, profit. So it's 206 pips. The next one, Great Britain pound, Canadian dollar. Could have got a lot more out of this if I just would have left it open for like another day. But I got out early, so only made $262 on that one. That was 17 pips. And then the last one was the one we just hit our take profit. I think it was yesterday, which was this one. Oh, I'm sorry, no, it wasn't. That was a couple of days ago. My fault. Opened it up on the 16th, closed it out on the 17th. For 206 pips. That right there was $2,774. So for a total of $4,512, which is pretty good when you consider that on average these trades were only open up for about a day. So we like those type trades. I like to only be in trade for a couple of hours. I don't really care to be in it for a couple of days or a couple of weeks. To me, it gets boring and it just gets tedious, because all you start doing is looking at the charts and then hoping and wishing that something happens that turns this thing around in your favor. And unfortunately, right now, and we'll get into this a little bit later on tonight, I'm kind of caught into one of those type trades right now in our live account, and so kind of like waiting for this thing to push out and hit our take profit so we can close that one down and go into something a little bit more simpler. But anyway, so that's where this particular pair is right now. If you haven't gotten into this trade right now, as of yet, There was a buy signal there. Right now it's kind of a pullback. Wouldn't necessarily buy it right now. What I would wait is I would wait until price gets into the buy zone, and I'll show you what I'm talking about here. So as you can see, right, this right here is the swing high, right? Um, and one additional point of connection, right? So it basically gives you your downward trendy, right? So what happens is typically what we do is we wait till price crosses over that downward trend line, right? And that goes into what we call the buy zone. Anything on the back side of this is sell, anything on the top side of this is buy. All right, so then it gives us permission to buy, and as you can see, price goes up, right? Right now, we're in a sell zone, so wouldn't recommend necessarily to get in right now at this moment because it looks like price is going to still be kind of selling off. What I would say, however, is once price crosses back over this downward trending line here, right, then you're going to be in the buy opportunity. Buy and then, be mindful of this resistance area on your way to your D extension, okay? But for right now, buying is off until price crosses over that, oh my gosh, can't even think, until price crosses over that downward trend line, yeah. Let's look at the Great Britain Pound, Canadian dollar. Kind of the same thing's going on here. I mean, it's doing a little bit of a pullback. Essentially what price is doing is just catching its breath. As you can see, we're almost here at the D extension. All right. So if you were able to put some money, if you're able to place a trade on this one, then congratulations, because you're close to hitting your take profit and making some money on this particular pair. That is cool. And just kind of notice here how price came down, bounced off of the support line, came up, pushed through resistance, and then pulled back, right, before proceeding back up again, right? And if you notice, every time it pulls back, right, it has to cross over that into that buy zone, right? Goes over to that buy zone before it pushes up. So just if you kind of keep that in mind, your A, your B, your C, and then we want to get in whenever price crosses over to the buy side of that descending trend line. Then if you get that, you got it. That's it, man. It's not that hard. I always tell folks, everybody's looking for all these different ways to trade and all that stuff, and really all you need is just really one good way, right? We can use some type of consistency in different markets, and doing the ABCD patterns, in my opinion, is that one good, it's a really good way to do it. Once again, this is the Great Britain Pound, Japanese yen. Same thing here. What you're seeing is price going into the price slowly moving up. Right. If you look over here, price got into the buy zone. Right. Boom. Price moving up. Hasn't hit it yet, but right now it's kind of like moving sideways for whatever reason. It was about 227 pips off. So it still has a way to go in this particular pair, but it has the right trajectory. So you see how that plays out. This right here is the Great Britain Pound, Aussie dollar, and what happened is we hit our take profit the other day, which was here, right? And remember what we talked about, the smart trend lines, sorry, smart Fibonacci's. Well, because we use a smart Fibonacci on this particular pair to get our levels, what's happened is that once it's completed, right, once it completed this Fibonacci sequence here, it automatically went in and drew the next fibs on the page, right? So this right here was our original take profit, right? And so what happens is now it goes back to where our C was at, and now that C becomes our A, and that D, the swing high past that D or at that D, now that becomes our B, and now the market is looking for its C, which very well could be here, right? Could be here. We'll see. But it's pushing up because now what it's looking for is looking to either say this is going to be our new D extension, or we're going to pull back a little bit farther to find a C. It may be safe to say that this right here is the C, right? Because it's pulling right off the 0.236 retracement, but you just don't know for sure, right? And I'll tell you the reason why you don't know for sure, because I just ran into a situation of what I'm dealing with. Well, actually, that is okay. So that could be right here. Situation like this right here, and I will tell you if you're going to trade this, trade cautiously, and I would probably go ahead and put my C. Probably put my stop loss underneath the C here, just because you didn't have much of a pullback. You had a pullback, but not much of a pullback. And I just ran into a situation where we didn't have much of a pullback, and now it's pulling back, and so it's taxing my nerves to say the least. But let's look at this. Next one, which is the Great Britain Pound, U.S. dollar. Alright, love this pair. Same thing happened here, right? This right here was the original take profit, and this thing just kind of sporadically spazzed out for a while before pushing up, hitting that take profit and going a little bit further. And so the software automatically charted out a new A and B. Now it's looking for the C, which it hasn't quite hit it yet. All right. See how tight this right here, this push up was? And that's why when we go back to this one, we say use a little bit of a caution. This really did pull back a little bit deeper. But as you can see over here, especially with this one with the US dollar, pushed up and now it's pulling back. So at any rate, when you get these shallow retracements, they can be good and bad. And the reason being is because they can be good so far as indicating that, hey, there's a lot of momentum, a lot of push, a lot of follow through in this move up for this pair. And also can be bad too, because at some point in time, people are going to want to take profits off of the table. And when they start to, it could lead to a deeper retractment. And if you got in up here in the shallow one, then you're going to have to endure that drawdown until price finds an acceptable level and then begin to push back into the opposite direction. So that's kind of where I'm at right now in the positions that I'm in. And man, it sucks. Let's look at the alternative pairs before we get out of here, because got a feeling tonight's going to be an early night. Yeah, so if you were in the U.S. Canadian dollar and if you were shorting that one is dead on DOA. All right. Because here goes the A, there goes the B. I'm looking for some potential C's. It never materialized. And as you can see, price did go and tap that A, right? It looks like it's going to probably push through the A. So now what you need to be looking for in this particular pair, then in my opinion, would be through. Need to probably be looking for buying opportunities. Oh, oh man, let's see what we got here. Let's try it over here. So. On the buy side of things, put our fib on the buy side. And we already see we had one, two. Working on the third Fibonacci sequence, and I gotta tell you, just I would still be cautious. That's 41. I would still be cautious even get into this market right now. I probably will lay out of this right here for at least another 48. I probably won't even get to this until next week, maybe. There's still a lot of uncertainty going on, especially with the U.S. economy and everything. We're dealing with the shutdown, so it makes these pairs and trying to trade these pairs even that more trickier. It looks like there's been a lot of sideways movement here, and when you start trading the U.S. dollar, Canadian dollar, you got to remember we're probably like Canada's biggest trading partner. So, however our economy goes is really going to affect their economy as well. And when you get all this uncertainty, what's going on with the shutdown, government spending, it's really going to have an adverse effect on our economy. You get all these workers out of work, and so therefore they can't spend anything. You're probably going to have some people that's going to be fearful of spending after all this is over just because of what's just happened. So it could really have a negative effect on our economy for some time. And so you just got to be kind of mindful of all that when you're trading these pairs, especially this pair right here, where the Canadian dollar is actually a major trading partner with the U.S. Let's look at this nonsense that I'm stuck in right now at the moment, which is the Australian U.S. dollar. We had one, two, three Fibonacci sequence to the downside that were completed. And the crazy thing about this is, when I first initially put the fibs in here, I thought maybe this was just going to be a Gartley, right? This was going to be a Fibonacci sequence within a sequence that was just going to let me know where the pullback was going to, go to, like where my C was going to be at, true C was going to be at. I had no idea that this was going to turn into a full-blown, Fibonacci 3 patterns in sequence, right? So now we're kind of left with some choices because here's our take profit up here, this green line, right? You see it? It's really red because we only pull back into the red originally. But what's happening right now, it was such a shallow pullback when the price did pull back. See, it went up, pull back a little bit, pull it back a little bit, right? Never went all the way down to a fib retracement. Thought, ooh, this thing has some pretty good momentum, right? Put the fibs on. Here goes that D extension. So it seemed like it was a pretty sound, pretty reasonable place to trade. Was able to get in here, right on the push up. So man, it looked really good. But unfortunately, over the last couple of days, this thing has really just not lived out to its potential. This thing is really starting to pull back like this, like it's giving up on life. I don't know. So the question is this, right? It hasn't even pulled back to the 0.236 yet, right? It's still in between there and the B. And the question is, will it pull back to the 0.236, or will this thing go ahead and start to push back up? Now, here's my take on it. My take on it, I believe that it will begin to push back up. It may travel down towards this zone right here, but I think that it should push back up. And I think we should get a rally out of this, and if no more than just back up to the initial peak before it started to fall, so to falter. Part of the reason why it fell is because they decided to raise the interest rates on the mortgage loans for the Australian dollar, for the Australian economy. But prior to that, they had got out some really good economic news about the unemployment rate and unemployment figures, and so that gave a good rally to the pair, and it was pushing up. And it had just that information alone, then we probably wouldn't be probably be having a different conversation right now versus the one that I'm currently having with you. But at any rate, not really worried about it. Here goes our A. Here goes our B. This right now, of course, will be our C, right? The question is can we? How long will it take for us to need to push back up? And we'll see, right? Other thing, if you notice, there's a big push down here, push down, push down, push down. Price is beginning to not be as heavily um, bearish. You're starting to pull back more and more and more. So it lets me know that bulls are starting to come in, some buying is starting to come in. How long will this buying stay in? That's the good question. Considering the fact though that we did complete this Fibonacci sequence here, this is completed now. So that tells me once again, it tells the market that hey, price can either do one or two things now. Price can either A, begin the U-turn and push back up, or price can start the next leg down of a new Fibonacci sequence. Considering that the overall play, right, is pushing up, then this just may be a little intermediate play within inside this bigger Fibonacci sequence to push price up. So sometimes it happens. Now this is kind of an unusual play originally anyway. So, but we'll see how it plays out over, once again, the next 24, 48 hours. Okay. We'll see. Anyway, guys, that's pretty much all I have for today. Um, Sorry, not much. Apologize. It's pretty much a hold tight, sell in your hands until price crosses over into the buy zone type of day. All right. If you get price crossing over to the buy zone, take advantage of it and purchase. If you don't get price crossing over into the buy zone, stay out of it and just sit on your hands and just wait for it to do that. There's no need to go out there and take risks that you don't have to take, and definitely you don't want to go out there and risk. You never want to risk money that you don't have to. Okay. Anyway, that does it for me. Hope you guys can take something away from this. Hope you guys learned something, and hopefully you make some money. I will see you in another 24.